Hi, good morning. Through this video, I would like to bring to your kind attention about what is currently happening all across the world in terms of particularly in financial markets and what all opportunities it actually is bringing to our Indian economy thanks to all these developments which are happening in financial markets. Overall, the financial markets has been going through a very tough phase. It has been going through a rough phase since 2007, the late 2007s. We have already seen US, which is ideally a $16 trillion economy, pass through a big recessionary phase. Although we have seen a bit of signs of growth in US as of now, but it had been into a big time recession for the last almost 8 years. Similarly, UK, a $4 trillion economy, or Europe, $7 trillion economy, have also run through a large recessionary phases for the last 8 years. Japan has been suffering this recessionary phase or a stagflation phase since 2000. That means almost 16 years have passed by for the Japan to come out of that recession phase, which he has been witnessing since 2000, which is ideally again a $6 trillion economy. Overall, the world economy is approximately $60 trillion, out of which US $16 trillion, Europe $7 trillion, UK $4 trillion, and Japan $6 trillion. Approximately $32 trillion worth of economies have been passing through recessionary phases. Of late, China has also shown signs of slowdown, which means $10 trillion worth of an economy, if it is showing a sign of slowdown and God forbid it lands up into massive slowdown or let us say an early phase of recession, it would mean that there is a crisis or a mess which has been created in this financial markets. Amidst this all happening in the financial markets, thankfully, India has been growing at a very decent phase thanks to the growing consumption and the production story in Indian economy because of the huge labor or huge population which we have as of now. We have already seen, because of this growing recession across the world, the prices of oil crashing to almost $30 a barrel and the prices of steel, iron and all those metals crashing fairly a bit, which means that there is no massive demand in those economies and the world over economies as well. This has created a grim situation across the financial markets, and because of which all the investors are idly hovering off to shifting off their bases to either investing into gold or investing into US treasury bonds if they believe that US would not go for a toss, and or the investors are going to their banks to invest their money into banks because they believe that their banks is the most safest source and they could invest their money into banks. However, because of this massive investment going into the banks and no production capabilities being available in the market, these all banks are also not willing to accept the deposits, or even if they are willing to accept the deposits, they are not willing to pay interest on those deposits. That's why in some of the economies, there is a regime of negative interest rates. Negative interest rates means the banks charge interest rate from the people who would like to invest their money into banks. Banks are doing so because banks, their primary function is to accept deposits and to make loans or to make advances. However, making loans or advances will only be possible if there is production capabilities happening in the economy. But since there is no consumption in those economies, since there is a recessionary phase in those economies, that means no one is demanding. If no one is demanding, that means there is no consumption. That means there is no production. That means there is no production, so there is no requirement of loan. If there is no requirement of loan, the banks believe that if they accept deposits, where would they invest? That's why the banks are charging money to keep the money of the people who would like to invest. Just to give you a quick crux again, growing recession means or growing slowdown means the GDP of those economies have been falling. That means the final value of goods and services produced in the domestic territory of those economies has been falling, which means the final value of production or final value of the goods and services produced, that means the production has been falling. Production has been falling, which means it is only because the consumption has been falling. That means the demand has been falling. This demand and consumption has been falling because primarily the major reason is that the population in those all developed economies, they are standing at such a phase that they are ideally having a higher lifespan, but they are dependent, they are not independent, because they have got high lifespan with good healthcare facilities. So they live up to more years than what we live in Indian economy. So in India, the average lifespan is around 60-65 years, but in Japan or US, the average lifespan is above 80 years, which means they tend to live for a higher phase of life, and that too accompanied with less of population explosion. Because in India, we have got plenty of population explosion, but in those developed economies, the less of population explosion and higher lifespan has led to decline in demand, because the majority of the population is dependent and is not young to idly demand or to produce or to help in the production capabilities. This whole scenario has led to one of the big opportunities in Indian economy, for which Mr. Modi Sahab has been projecting and propagating about a concept known as Make in India. Now, Make in India is ideally manufacturing in India. So ideally, Make in India or manufacturing in India requires three things. One, we need money or capital, because we do not have plenty of money, we do not have plenty of capital. Second, we need resources. That means the inputs to production or raw material to production. So we do not have plenty of resources, we normally import those resources. And third, we need labor. Now we have plenty of labor. So we have less of money and capital, we have less of resources, but we have plenty of labor. And the demographic transition of this labor is such that out of this labor, between 18 to 35 years of age, we have greater than 60% of our population. So greater than 60% of our population is between 18 to 35 years of age. That means we have got a young population who can demand, who can consume, who can produce. Similarly, we have got independent population who can demand and consume, independent population, which is greater than 80%. That means we have less of dependence. Less of dependence means more of independence, which means a lot many labor can help in the growth story of Indian economy by producing more, by consuming more, by demanding more. By consuming more or demanding more, that means or producing more, it will lead to increase in the GDP of Indian economy. That's why India has been growing and has been insulated or isolated from all those financial markets hiccups which have been coming through. Although a bit of minor hiccups have been coming into financial markets or Sensex going down or up a bit. Now, this money capital, Modi Sahab has been going to all those countries, all those developed economies who are going through a rough phase of recession or slowdown, to ask them or request them that please bring your money into India so that you can do Make in India, because we have got plenty of labor who can produce, who can demand. That means they can demand, they can consume and they can produce. What we require is we need money and resources. Now money can flow in the form of two methods. One, money can flow in the form of equity, that means share capital. That means equity investment. So equity investment. But of course, equity investment can come in the form of FII, foreign institutional investment, which comes almost every day in the economy. It goes out as well. जितना जल्दी वो आता है उतना जल्दी वो चले भी जाता है FII. Similarly, we also have FDI, foreign direct investment. This foreign direct investment comes for a longer period of time, like FDI opening up into insurance sector, into real estate sector. So this comes for a longer period of time, which is quite good for the Indian economy. Similarly, this equity investment is required by the corporates. So that means the big corporates like Reliance Industries, Tata, Birlas, they all require money in the form of equity investment, and these all corporates, they require it. Second, medium or mid-sized corporates. Third, small and medium enterprises, SMEs. These all companies, they require equity investment. In fact, if you see, corporates or mid-sized corporates are majorly listed on National Stock Exchange or Bombay Stock Exchange. And in order to stock exchange going up, we need money into our exchanges, into BSE or NSE, in Nifty or Sensex, which comes in the form of FII. Similarly, for long-term projects, they need money in the form of FDI. Recently, exchange has also been set up by Bombay Stock Exchange, which is known as BSE SME Exchange, which shows that even SMEs, they want to get listed on Bombay Stock Exchange and to raise money from equity market. This means there is something future in it. Some future in it is bound to be there, and which means that massive funds flow in the form of equity will flow into SMEs as well. A lot many mutual fund companies, they also have come up like small cap mutual fund, mid cap mutual fund, and but of course there are already existing large cap mutual funds. Similarly, the second form of money coming into India is in the form of bonds or in the form of debt, which is very important. Indian government has more expenditure than revenue, which means we have got a fiscal deficit. That means expenditure is more than the revenue. In order to finance this fiscal deficit, we need money. We can either raise money from the World Bank, or we can raise money from the public debt. We can also raise money in the form of bonds from the outside world. And Indian government requires a lot of money through bonds. However, as of now, there is less of liquidity in the bond market because of lack of education, etc. But in the times to come, the bond market will grow massively, which is also known as fixed income market, fixed income securities market. So this bond market or debt market will massively grow because government of India also requires money in the form of bonds. So that means government requires money. And but of course, these corporates require money in the form of bond. The mid-sized corporate require money. And similarly, the SMEs, they require money in the form of bonds. That means in the years to come, in few months from now or years to come, massive funds flow will happen in the form of equity and bonds. We have already seen a lot of funds coming into India in the form of equity investment. In fact, recently, since April 2015 till date, around $30 billion of equity investment has come into India, which means a massive funds flow has been coming into India, and I'm sure bonds inflow is also coming to the tune of around $20-25 billion annually. We do not have a matured bond market index, or let us say tradability of bonds availability in India. That's why a massive funds flow into bonds is restricted as of now, but going forward, this market is also bound to grow. Similarly, this whole investment coming into equity or bonds market, it will be coming in the form of foreign exchange. That means a massive funds flow, whether it is in the form of equity or bonds, is ideally coming in the form of foreign exchange. That means the first sector which will grow will be equity, second is debt or bonds, and third is FX, which is ideally foreign exchange. Now, these three sectors, but of course, foreign exchange, we have got one more point to add is, since we are living in a globalized world and we'll be importing resources from across the world, but of course, when we produce in India, make in India, we would also like to export these all goods later on one fine day when the demand grows up in those territories. That means more of foreign exchange involvement will happen in the form of exports and imports. That means exports and imports will need more knowledge on FX. And second, but of course, all these funds coming into equity or bond market will be in the form of FX, so we need more knowledge in FX. However, equity, bonds and FX, or let us say resources, which means commodities like steel, copper, iron. So these all four segments will have massive movement, will have massive volatility, because if foreign exchange is moving like this, commodities is moving like this, and let us say share market is also moving like this, and going forward the bond market also moves like this, every person who will get affected by this volatility would like to hedge their exposure, which means they would like to protect their exposure. And this protection or hedging will only be possible if they are able to do derivatives on all these underlyings. Hence, in the future time period, everyone would require knowledge on anything and everything related to equity, debts and bonds, currency foreign exchange, commodities, and above all will be derivatives. There was a phase in 1990s when there was a phase of non-medical engineers. Maximum engineers बनते थे क्योंकि उस जमाने में engineers की बहुत डिमांड होती थी. But in 2000s there was massive demand for computer science, for BCAs, MCAs. There was an IT bubble. But now, since 2010 onwards, for the next 15-20 years, we have got a phase of financial markets. And this financial markets phase, India would be one of the growth stories, because everything which is happening in Make in India is happening because we have got massive production and consumption power in the form of labor. In westernized countries or the developed economies like Japan, US, UK, Europe, who have been passing through a recessionary phase, they have less of labor as of now. That's why they are falling into a trap of recession. In order to come out of this trap of recession, they'll have to produce more labor, which means they will have to do more reproductions. But this reproduction will take time, because the reproduction done today, they will grow after 18 years of time period to demand or to consume or to produce. That means for the next 18-20 years, we have got a massive boom in financial markets in Indian economy. Only point is, the Make in India concept story, the growth story, has got one hindrance. That hindrance is the labor is not skilled. That means we have got massive labor, but we do not have a skilled labor. That's why Modi Sahab and a lot many agencies, a lot many education institutes, they want to produce practically equipped labor. However, in Indian education system, we do not have a scenario wherein the students which have been produced by the education institute, they are practically aware or practically inclined as to what is happening in the Indian economy. So my urge, my message through this video is, आने वाले समय में, in the times to come, there will be massively two requirements. One, we would require gyan, that means knowledge. So that gyan or that knowledge has to be very, very unique. And that gyan and knowledge has to be in financial markets. Similarly, the second thing which would be required would be Jan Pehchan, that means networking. Ideally, Jan Pehchan or that networking has to be produced through Gyan, because a networking which has been produced by Gyan, it is a everlasting or a long lasting. जिसके पास ज्ञान होगा सिर्फ, यानी कि only knowledge, they would be only employable. That means उनको अच्छी नौकरी मिलेगी, but वो जिंदगी भर नौकरी करेंगे. And जिनके पास सिर्फ जान पहचान होगी, that means only networking, they will not be able to sustain for a greater time period without knowledge, because networking will ultimately pass by, because people will directly tend to meet each other rather than depending upon the broker or the person to make them meet. But if a person has got unique ज्ञान and उस ज्ञान से बनी हो unique जान पहचान, यानी उस ज्ञान से ऐसी जान पहचान बनी हो कि वो क्लाइंट सोने से पहले और उठने के बाद सिर्फ आपको याद करे, that means you do not need anything, because then one fine day you can become an entrepreneur. So in the times to come, you need massive ज्ञान, unique ज्ञान, and उस ज्ञान से बनी हो ऐसी जान पहचान जो सिर्फ सोने से पहले और उठने के बाद आपको याद करे. That means you need a combination, a blend of huge dynamic ज्ञान, knowledge, and from which there can be a everlasting relationship, जान पहचान, यानी कि networking. In the next few videos, I'll tell you how you can best acquire the best of the gyan so that ultimately you can progress in your life and make your career big. Thank you very much.